So what are the main fees that a lender typically charges to give a loan?
So have you looked at a loan estimate recently? How confusing it can be for a first-time buyer?
Exactly.
I mean, it's if you look at a loan estimate, there are numbers everywhere, and there's A, B, C, add D. It's insane.
That's the thing. It's like subtract this, add this. This number's down here, but it's got to be added to the number.
Yeah,
up top.
there's no way, unless you are in the industry or in real estate, that a first-time buyer, for the most part, is going to be able to understand where all these numbers are, where they go, and how they even came up with those numbers, right? So if you really want to simplify it, it's very simple. It's lender fee, title, recording, and state of Florida. That's it. So B is title. So if you're buying a house in Palm Beach County, most of the time, seller pays title. Seller picks, they pay title, right? So that, for the most part, you don't really have to pay attention to. I know it sounds crazy, but...
And if you're looking for a lender specifically, right, you can't compare them on title fees that you guys are estimating, and then another lender's estimating. I've had buyers come to me and say, well, this guy's title fees, this lender's title fees are cheaper than this lender's. It's like, dude, those are all estimates, and the lender does not control
apples and
those.
oranges.
Yeah.
So I always say, if you're looking at a loan estimate, you've got A, B, C. A is lender, B is title, C is recording in state of Florida. Take B and C and don't even look at them, because it's going to be the same no matter where you go. Seller picks and pays title in Palm Beach County. If they're buying in Broward, the buyer picks the title company. We don't know what those fees are going to be. C is recording, doc stamps, intangible, going to be the same regardless. You look at Section A, right? So appraisal, for the most part, is going to run between $575 and $600, unless it's a rush. If it's a rush appraisal, we got to close in 7 days. It could range from $800, could be $1,200. What we do is anything above the first $200, we cover, right? So if the appraisal fee is $575, if the rush is an additional $500, so now your appraisal cost is $1,075. You cover the first $575 because that's what it would have been regardless. You cover the first two, we cover above that. So if the rush fee is $700, you cover $2, we cover $5. If it's $6, you cover $2, we cover $4.
I've noticed you guys, and this is why I didn't know this. You guys are always pretty cheap on rushed appraisals.
We are. We got a great relationship with the AMC. We have a fantastic relationship with them. They bend over backwards for us. I mean, we send them quite a few appraisals, and we have multiple branches too. That
goes back to what we were discussing earlier. Because you guys move at scale, you have these types of relationships that benefit the client.
Yes.
Yep.
Yes. And we don't have the ability to pick the appraiser, right? So, excuse me. So we don't have the ability to pick the appraiser, right? All we can do is order through the AMC, which is the appraisal management company, and depending upon how quickly we need that back is going to determine the price, right? It's basically like a bid system, right? So we put it out there, need this back in 3 days, and then we'll get a response from the AMC. You can have it back in 3 days. It's going to cost you $900. And then we'll go back to the buyer and say, hey, look, it was $575, which is what it would be standard. The rush fee is $325. You cover $2, we'll cover $125. In that scenario, we'd probably cover more than that. We don't want a transaction to be held up because of an appraisal, right? If it's a few $100s, we'll work with the buyer, right? We want to get that done. So, what I always tell the buyer, if you get a loan estimate, take B and C, don't even look at it. Section A, appraisal, lender fee. That's it.
Got it.
Right. Credit report's going to be, $50, $75. I mean, if there's a rapid rescore for something like that. But for the most part, it's $50 for the credit report. And at that point, it becomes, you look at processing, underwriting, origination cost. And that's it.
Got it. And something else to keep in mind, I've seen buyers get held up on this. They may go to one lender, the rate is X, and then they go to another lender, the rate is Y, and they're like, oh, X is lower than lender Y, so let's go with them. And I'm like, hang on a sec, let's just look at the fees real quick.
Yep.
Right? Because there might be discount points in there, so they may be giving you a better rate, but they already applied like a $2,000, $3,000 discount points to your closing costs.
The other thing too to keep in mind is when was that estimate sent, right? So if you go to lender A on Monday and they're at 6.25 with no points, and then you go to lender B on Tuesday because you want to see if you get a better rate, and the market got better that day, well, now they're at 6 and lender A is at 6.25. Well, are you going back to lender A to see if they're at a lower rate? Because now you're comparing apples and oranges, right? To really do a true estimate, to make sure that you're comparing apples and apples, you get your estimate on your loan estimate whatever day from lender A, right? You get lender A and lender B on a Monday. You go back to lender A and lender B on a Tuesday. You get the same estimate, right? Because if you go one lender on Monday and another lender on a Tuesday or Wednesday, the market may have shifted. It may have gotten better. So now lender A may actually have a better rate than lender B.
Exactly, and I see buyers get frustrated for a lot of reasons in this moment here that we're talking about, right? So, that's a huge point. And then also buyers like to just go to a lender and say, "Hey, what's the rate?"
What's
right?
the
It's
rate?
like, dude, I can't tell you the rate. One, it's changing all the time, and then two, like, I don't know if I have all your information. So they really need all of your information in order to really answer that question.
Yep.
It's a little different in the world that I play in on the multifamily and commercial side. They can pretty much, because we have relationships with these banks, I can pretty much go to all 6 of them and be like, what's your rate? What's your terms? What are you doing today? Right. Yep. And it's usually pretty consistent for months at a time, not the rate specifically, but the terms and how they're working in the market. So like I can ask that question, they'll give me an answer. But like when I go do a resi loan, it's different. It's like totally you can't do that.
I've had buyers come to me and say, "Hey, look, I spoke to another lender and they were 0.25% better than you." I'm like, "Okay, well, do you have a loan estimate?" "Yep." Excuse me. And I look at the date. I'm like, "Well, that was, the estimate we sent you was 5 days ago. The one you have from them is better because the market got better." Right? Give us an opportunity. Let me take a look at it and see if I can offer you something better. Right? Because the market may have gotten better. Coincidentally, or conversely, the market may have gotten worse. Right? So if you call me and say, "Hey, I'm looking to get a second opinion. I was offered this from another lender," I may come in with a higher rate, and you may say, "Okay, well, I'm not going with that guy. His rate's 0.25% higher than this guy." Well, I give you today's rates, and that guy gave you a rate from 5 days ago, and he still never locked you.
Yeah.
Remember, too, you can't lock a rate without being under contract.
That's what I was just going to say.
So really, at the end of the day, it doesn't mean a whole lot.
You don't know the answer until you lock, and you can't
Correct.
lock without having a signed contract. So you really,
Correct.
Unfortunately, I get some of the frustration from the buyers. It's like, "Hey, I don't know the answer until I'm already like committed."
Of course, especially a first-time home buyer. You've never done this before.
Totally. So
it could drive you nuts.
So what? Yeah, totally. So what I tell my buyers is, it's going to fluctuate a bit, right? So kind of find the lender that can really execute well, that you feel really comfortable with, and then make sure they're within the realm of reasonability. Yes. And then you need to like really think about, and this is what I tell people a lot too, is like if I'm telling you CrossCountry can execute and they're pretty close, like I highly recommend you just go with CrossCountry because they can execute. So and if there's some random one-off lender that we don't know and you don't even know and you don't even know if they can execute, it's like, and they're pretty close, it's like, guys, you should probably de-risk in this situation.
Well, two things also to touch on. Number one, we do offer a program that when we close a client, we can refinance them if rates happen to drop, and we don't charge any lender fee or the appraisal. So if we're waiving underwriting, processing, and the appraisal, that's a savings of about $2,100 that we'll wipe out immediately, right off the bat if you're refinancing with us, right? And then that's something else to touch on. Talking about the I'm drawing a blank.
Competing on rate.
Oh, so we do also. What we can do is if we lock you in today, and the market gets better from the day we lock up until closing, we can float you down to a lower rate. So if I lock you today at 6.5, and you've got a 30-day closing, and 2 weeks into the process, the market plummets, and now that 6.5 is 6.25, we can float you down at no cost. So we'll honor the lower rate if it is available.
And I've seen you guys do that before, so yep, that's another advantage. So yeah, so that generally kind of covers just competing rates and cost associated with lending. And when you're a buyer trying to make this decision, it's always good to you could chat with me about this specifically, chat with your broker. And if they're in tune with what's happening, they can kind of help you really think about what to do here.
Really what you got to do is, and it may not be me, right? I hope it is, right?
Yeah.
But you gotta find someone that you have a connection with, right? There's got to be trust on the other side, right? So if someone calls me and I lay out everything for them, right? My goal is for us to hang up the phone and for you to say to yourself, you know what? There's no need for me to call anybody else. I trust that company and that gentleman is going to direct me is going to guide me in the right direction. And if I haven't done that, shame on me, number one, and number two, you're free to call somebody else, right?
Sure.
Because you've got to establish trust, because as a first-time buyer, everything that we've just gone over, for them to really have a broad understanding of it is almost impossible.
I agree. I've worked with a handful of first-time home buyers, and sometimes I take for granted how just dialed in I am on this process. Obviously, I do this every day, and I'm just like, oh man, I can't believe he's not processing what I just said.
This to a first-time buyer would be equivalent to me, me having to work on my car.
There you go.
I know nothing about a car. I don't know where you put the oil. I don't know where the engine is. I know nothing about it.
Yeah.
I don't even know how to pop the hood, to be honest with you. So for me to have to do any kind of work on my car, that's how I would look at this if I were a first-time buyer. You guys do this every day. You know about it. You have to explain this to me as if I'm, I say this respectfully, a child learning something new.
Yeah.
Right?
Yeah.
And if they're not comfortable with me and you and they don't understand it, then number one, we haven't done our job. And number two, they're going to look for someone else.